Hi, Ben here with Winford Consulting. Take a look at this extreme case analysis with me. But first, just to be clear, our consultancy does not deal with stocks, trading, or investment advice. Our focus is on data visualization. This video is purely for entertainment purposes. And with that said, let's dive into it. Extreme case analysis is a problem-solving and analytical technique that involves examining the boundaries or limits of a situation to gain insights from more typical cases, such as one that your company might be facing. I'll set the scene of our upper limit. It's your birthday. All your friends and family are over to celebrate with you, eat some cake, and of course, shower you with presents. Your grandmother brings the best gift of the day, a magic crystal ball. And this isn't just any regular crystal ball. This one only gives you stock tips. And today it tells you a perfect NVIDIA buy-sell strategy. What would a perfect buy-sell strategy look like? This graph demonstrates its logic. This is the hypothetical performance of NVIDIA's stock versus the perfect buy-sell strategy of NVIDIA over the same week of time. Let's say the stock rises from Monday to Tuesday. Both NVIDIA and the crystal ball strategy would look the same. But now let's say that NVIDIA's stock price drops on Wednesday. If you had a crystal ball that could tip you off to that upcoming dip, you could sell on Tuesday to avoid it. And that's what we see here. The stock falls while the crystal ball strategy remains flat. The same thing occurs on Thursday, but also on Thursday, the crystal ball tells you the stock is going to rise tomorrow. So you buy back in. A real-life stock price can rise, remain flat, or fall, but a perfect buy-sell strategy avoids any downturns. It's also completely theoretical and can never be implemented. This all leads us to our question. What is the 10-year return of a perfect NVIDIA buy-sell strategy? To answer this question, we need NVIDIA's daily stock price for a period of 10 years. I've chosen October 15th, 2014 and October 14th, 2024 as our arbitrary start and end points. The stock went from 44 cents a share to $138.07 a share. Quite the return. This column here shows the daily percent returns for the stock. As an example, between October 20th and 21st, the stock went from 44 cents to 46 cents, an increase of 4%. If we invested $1 in the stock, it would grow to $316.67 over those 10 years, an absolutely tremendous return that I'm sure has created numerous millionaires. But we scoff at millionaires with our magic crystal ball. This column here shows how the same dollar investment would grow if the perfect buy-sell strategy was implemented for 10 years. This graph is a small representation of our analysis shown here. Before I scroll to the bottom, take a guess. What return will the perfect buy-sell strategy produce? $1 billion? $100 billion? Last chance. $7 trillion. 7 trillion X. The 316X return looks lousy in comparison, doesn't it? Well, firstly, I hope you found this video entertaining. Thanks for sticking with me. In this extreme case analysis, our data-driven decision-making was perfect, 100% accurate, the uppermost limit. In real life, we can't get close to that level of accuracy, but we don't need perfection. Even a reasonably good data-driven strategy should yield significant returns. At Winford Consulting, we help businesses apply data-driven strategies not to chase perfection, but to create repeatable, scalable improvements to business operations that compound over time, albeit not to $7 trillion. Bye for now.